everyone, John here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook for tomorrow's trading. Tomorrow being the 24th of the month, rounding out October, and, well, kind of starting off the week a little bit slow, to say the least. It was another really slow day today. No news at all, really. Fingers crossed we pick up a little bit more volatility. Tomorrow's news calendar doesn't look much better, but, you know, at least we've got one slow day out of the way. Maybe that's all they need to kind of pick things up again. Before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you'll be able to sign up on our email list. It's a totally free newsletter that gets sent to you going over everything that we're looking at. You can get notified when the video comes out, but along with that, within the newsletter itself, we talk about a bunch of different stocks and cryptos and anything interesting that's going on, so you want to make sure to sign up for that so you don't miss anything. You don't want to be left behind in that case. Along with that, if you haven't done so already, make sure to click on the Live Trade Room subscription and trial info. You can sign up for a 3-day trial in the Live Trade Room, again, totally free, and you can check us out for a couple days and see what we're all about. It's a great way to kind of hang out with us for a little while, see our screens, see the trades that we're looking at taking, seeing how we analyze the markets. Just a good way to see kind of the inner workings of what we do every day. So make sure to sign up for that if you haven't done so already. Now, taking a look at the overall movement on the 60-minute charts, first off, on the euro, we have a overall wedge. We're not really gaining a whole lot of ground up or down. They are trying to break down through the lows of the wedge, but we've already broken underneath it. They've used the wedge bottom as resistance, and now they're trying to break lower. This could simply just be them preparing to widen the market out a little bit on the wedge bottom. So the earlier wedge was right here. It held nicely as support and resistance. Now the next wedge would be one notch lower. We have large support that we're sitting pretty much right on top of at 17,730, and it's really easy to see if we zoom out a little bit further. We can see this area was definitely a location that we need to be paying attention to, and we are right back there again and resting right on top of it. Every time we've tried to break underneath this level, here, it was met with stiff buying support all the way back up until they eventually broke out of the highs. So now that we're back here again, we are seeing, once again, very strong buying pressure on every attempt of breaking out to the downside. Which means that if we break down underneath this, and we know that they can get a little bit of leg to the downside, I would love to buy an offset underneath those lows, assuming that those buyers will come in after they build into some positions and drive the market back up again. So the major buy zone is going to be a little bit further down at around 17,340, all the way down to, 17,130, but arguably could go even a little bit lower than that, all the way down to 1,700, really. This whole area underneath that range deviation down from the news candle that we had back here, that's where this big blue box is coming from. We have the deviation down. They are finding support there over and over and over again. We have everything kind of stacking up. Major support underneath, news deviation lows. We have the wedge low that's trying to widen out a little bit. Lots of stuff that are lining up here for a bounce off of the bottom edge. So if we can get a break down, I would love to see some buying pressure back up again. Over on gold, mostly just a descending wedge working its way lower. We are pushing into a potential 3-push wedge bottom. They missed that low by just a little bit off of major support at 73.7. And once again, if we zoom out a little bit, we can see that that really is just coming from back here, and now they're coming back. And the fact that they retested it so perfectly and bounced off of it really gives us a lot of emphasis to be paying attention to that 73.7. But we can make it even better by going back even further and seeing that they had a nice double bottom. They had that as resistance. There was a head and shoulders formation that formed right there. This is a big key area of interest that the market is paying attention to, so we need to as well. So really what we're looking for here is this lift to be kind of a faux lift. The big thing that stands out here is the fact that we had such a strong move down into somewhat of a spike and wedge, spike and channel kind of formation. They came back and retested those highs. They trapped the top into other major areas of support or resistance. And, well, we're kind of anticipating the same thing. But the one thing that really stands out here alongside of that is simply the fact that these lows are getting really weak. We had a big old breakdown here, and then a really tiny one right there, and then they tried it again, but you can see the breakouts are getting smaller and smaller. So even if they do break out to a new low, I have to assume it's going to be smaller yet, and there's just going to be buyers waiting underneath there to buy it right back up again. So overall, in the short term, we are looking for the bears to take back over, likely off of this big peak high, maybe one more high, but inevitably to shove the market back down, retest at 73.7, and if they can make a new low, assumably buyers will be underneath there to push the market right back up. So we have both sides of the game plan. We're selling the highs and buying the lows if it ends up making one. Over on crude oil has rallied back towards the highs again, and we're just stuck in the same range that we've been in for a while. We're cycling off the highs, off the lows, off the highs, mark that whole area up, off of the lows. But they tried getting a breakout to the downside, and that failed. That's usually the start of a move for continuation, right? The sellers tried to probe the lows. There was no interest in the lows. The buyers took it over and slammed the market back higher. Now, we do have a little bit of a gap to fill from the weekend, but aside from that, this could be the pre-breakout move, the accumulation before the storm to the upside. We are still dealing with major resistance at 52.27. That area has been no joke, and certainly not anything that I want to play around with. But as we start pulling back here, we might only have the opportunity to buy this sort of mid-level of support before we continue the breakout to the upside, since we have the breakout that failed at the lows. Now, there's never a guarantee that this is going to be the start of the breakout to the upside, but this is where they have the best shot at it to try to get things going to the upside. But if we can get a little bit of a deeper price, notice we have channel lows and horizontal support all coming together, and that would be a beautiful area to buy into at some much better prices at around 51.22. Either way, though, we have a intermediary level of support coming into play here at 51.69 for buyers to buy into for the breakout move up, or if they want to play it a little more conservatively, we have the dip down to around 51.22 for the exact same reason. And then finally on the S&P, along with all of the other indexes, the NASDAQ's a little bit weak comparatively, but all of them had a beautiful rally. They continued the rocket ship back to the upside, and now we're pulling off a little bit off of those highs. Likely a lot of buyers who bought that big old dip, they're taking profit. Now we have a double top, even more of a reason to take profit. You have a lot of people that are taking profit up here and causing a little bit of a pullback. Now, this is by no means going to be the end of the trend, or at least not likely. The trend, this is not something that I want to stand in front of. This is a monstrously bullish trend. So with that in mind, we're looking to buy a pullback. We're getting clues that obviously buyers are not interested in the highs anymore. Beforehand, on a strong trend, you just keep going up and up and up, and buyers just keep buying the whole way higher because they have interest in the highs, and they assume that the highs, once they break out, are just going to keep going. We're not seeing that anymore, right? We're seeing the buyers taking a break, buying low, right? They're not following through to big new highs. They get one big breakout candle and they fade it right back down, exiting some of their buys, and then they buy in the pullback and they do the same thing, rinse and repeat. We're finally getting a halfway decent pullback, and that means that we're looking for support to come into play at around 25.64 down to 62. That 2-point range is going to be a big area of interest for buyers to buy into and make one more go at those highs once again. So going into the overnight session, or maybe even into tomorrow, that's kind of where we're looking for some buying pressure to pick back up. So that's going to do it for the futures outlook. Now, looking for the news tomorrow, we do have some news tomorrow, but no U.S. news. Tomorrow morning at 3:30, out of the German side of things, we have the German manufacturing PMI for October, forecasted at 60.2. The previous was 60.6. And then tomorrow evening, out of Australia, we have at 20:30 Eastern Time, of course, the CPI quarter over quarter for quarter 3, forecasted at 0.8%. Previous was 0.2%. That's it. We don't have any U.S. news. We don't have anything like that. Just straightforward. That's really all we have. So tomorrow, probably going to be a pretty slow one in the U.S. session again, but we'll make do with what we have available to us. Jumping over to the crypto side of things, Bitcoin catching a nice little pullback here off of the highs. They pushed above 6,000, right? Ring the bell. We made it above 6,000 all the way up to almost 6,200 before we started pulling back. And now we are getting some signs that we are starting to fill a lot of these levels of support. Levels of support are coming off of a couple different places. First of all, that big breakout point to the highs, coming back to that is very common. When you break out of a big level like that, very frequently the market will pull back, fill it, and then continue. But along with that, we also have a lot of support that's beginning to structure inside of there, and it's creating kind of this multifaceted zone of support. The sellers tried breaking out, but noticed the terrible follow-through, right? Horrendous bear candles, and the buyers swooped right back in to pick it back up. Now, I don't necessarily believe that this is the bottom. I think we have one more leg in us for the downside move, and really what I would be looking for is a 3-push wedge bottom, maybe this to form into a wedge of some form, but I would love to see one more push through the lows for buyers to pick it up at around 5,600 to then shove the market back up and see if we can get back above 6,000 again. Overall, everything is still looking nice and strong, good bullishness coming into the markets as per the usual when it comes to Bitcoin. We haven't really had a good healthy pullback since, you know, I mean, I guess a couple days ago on the 18th was a good pullback, but in the grand scheme of things, when I say healthy pullback, I mean something like this, right? A big pullback. We haven't had one of those yet, and we still have wide open that big swing that we broke above. Just like we were talking about back here, we break out of a swing, the market likes to come back and fill them. Well, that bigger swing is down at 49.90 1/4. So we may have a little bit more bearishness if they want to start filling some of those areas of interest. Aside from that, though, everything is still looking really good. We might just have an opportunity to buy at a better price. Over on Ethereum, dipping down into major longer-term support levels, we have the previous swing lows and just a cluster of support and resistance inside here that we're dealing with. And along with that, we have a wedge, a descending wedge that is breaking out lower very frequently. That is a sign of exhaustion, and that might be all they have to the downside. Maybe one more leg. A lot of times when they break out of the lows like that, they'll get 2 legs. So one more new low could be in store for Ethereum, but overall, they might be running out of downside pressure here sooner than later before we get a roll back to the upside. Now, playing devil's advocate, looking on the sell side, if this does start breaking lower, shorts are going to have a lot of open space, right? They're going to have a lot of open space until we start running into major support, because the next level isn't really until around 250. And then if that breaks, then there's really not anything until 200. So there's a lot of open space for sellers to try to drive the market down. The ICO market has been up and down, and lots of countries talking about, China banning it, and then there's just a lot of stuff going on with ICOs, which the reason I bring that up is that's likely why Ethereum caught such a big lift in value. People have to buy Ethereum to fund the ICOs. And because of that, Ethereum has caught a monstrous rally higher when we had this gigantic boom in ICOs. But ICOs are calming down a little bit with all of this pressure against them. Not to say that they've dried up, but there certainly are a lot less that you see, kind of buzzing around on Facebook as paid advertisements and all that. I'm not seeing as many of them. And that could be also another factor of the lull in price here that we're getting on Ethereum. So again, a lot of short traders may have some open space for the downside, but buyers are certainly holding right now until that breaks. Well, the buyers still have to have the benefit of the doubt. Over on Litecoin, speaking of benefit of the doubt, they failed theirs. Litecoin had this big level of support and resistance. In order for the buyers to continue their rally to the upside, they need to break through it, and they failed, and they failed, and they failed. So with that failure, we are seeing that buyers are no longer interested in buying high. They are buying low. We're buying the 786, buying into deep pullbacks, previous swing lows, really anything that is low, right? All the way down to 48.60 is still applicable. But until we break out of that, we have to break these highs at around 61 to 62. If we can break above that, then we have good chances at continuation. But until then, we're mostly still kind of bearish a little bit here with a falling level of resistance, and possibly even, if we see here, maybe a wedge bottom coming into play as well. So we may have a little bit of support further down, but we still have the pending bear pressure since the buyers failed their proof up on the top here. Jumping over to NEO, good old NEO is still on cheap prices. Major support and resistance level sitting at 26.21, along with that deeper support at 23.14. And then, of course, the big head and shoulders formation. The objective to the downside is going to be at 18.28. So there is still the potential for a much deeper pullback, but right now the buyers are still remaining very strong on these lows. And until they get out of the way, the buyers have to be given the benefit of the doubt here as well, and likely going to continue back up. Right now, we're just kind of rattling between the lows of around 26 to the highs of, we'll say 31.75, just to make life easier. We just kind of ping back and forth between there. I still think that, NEO in the long run has a lot of upside potential, but we got to break out of this funk first. Right now, I'm considering this as cheap, and anything lower than 26.21 is going to be considered on sale in my book. Over on OMG catching a dip down into major support as well. The original bounce had already taken place. If you were following us on Twitter, we were talking about that bounce area off of the lows. And we're now kind of hovering around there again. We have support coming in the form of the earlier channel lows. It's so shallow that I can't really even draw it. But if we zoom out here, you can see that low to low. They tried breaking out and failed, and now we're retesting it again. This is another viable opportunity for buyers to attempt to get a potential rise higher for continuation back up. Everything is still looking nice and strong. It's just a matter of how much juice they want to put on the on this retest of support to the upside. Right now, I'm looking at it with buying around $7. I think we should be able to make it back up towards around 771, 770s in that area before we start running into some trouble with this higher low. That's where the sellers are likely going to start trying to push back a little bit. So OMG definitely has a little bit of potential on the table. And then the final one, CVC, that's Civic, is forming a beautiful little bounce here. We have a boatload of support, very similar to OMG in the terms of a range, attempted break out of the downside failure. We now have a rocket ship out of that. So looking for a pullback to bounce back off of around the 30-cent range, which we're testing kind of right now for a continuation back to the upside to around 36 cents and maybe even on up towards 40 cents for a pretty good move back towards the top. So that's going to do it for the outlook. Like always, and like we always say, it doesn't matter what market you're approaching, whether it's crypto, stocks, futures, you name it. If it's moving and you're trading it, you got to make a plan, trade that plan, follow the rules, and you'll be A-okay. Until next time, we'll see y'all then.